Welcome everyone to Vested Interest. This is Shane back for a Stock Pick of the Day video. We are going to take a look at global payments. This is out of the industrial sector. Before we get too far into the video, if you could hit all of those buttons down below, the thumbs up button, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Drop a comment down there. Let me know what you think of the video. Let me know what you think of global payments. And watch time, if you could watch the videos to the end or as much of the video as you can. Watch time is one of the metrics that the YouTube algorithm looks at. Share the videos with anyone you think that might find value in the content. And a special thank you to the viewers and subscribers of the channel. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. This is the criteria we will be running through today. We will not look at price to book. That is really for financial companies, specifically for banks. So it must meet 5 of 8 to make it onto my watch list. And keep in mind, if it does make it onto my watch list, that does not necessarily mean I am buying. It just means I am interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, and doing a discounted cash flow analysis on the company to figure out a price or a range that I'm willing to pay for it. All right, check them out on their homepage, www.globalpayments.com. That's www.globalpayments.com. That is their homepage where I pulled this information from. Stay ahead in the fast-paced world of commerce, knowing we spent yesterday thinking of what you need tomorrow. Whether you're a merchant, issuer, or developer, our payment solutions, and that's really what they focus on, payment solutions, help you streamline, scale, and succeed. And you can see here some of their products. Payment acceptance, issuer solutions, online payments, accounts receivable, accounts payable, point of sale, retail or restaurants, manages your business through reporting and analytics, business funding, payroll and HR software, employee payments, or market your business if you're looking for some marketing, gift and loyalty programs, email marketing and analytics programs. So they offer a range of products for your businesses, but really they are focused, their bread and butter is around the payment solutions portion. Now, the reason we're taking a look at them, down 1.53% on the day. It actually looks like they're down slightly in the after hours, at least whenever I pull this information. We are talking about Global Payments Incorporated, ticker GPN, again out of the industrial sector. Closed out the day at $77.77. 52-week range as low as $65.93, as high as $120. Not quite within 15% of a 52-week low yet, but getting very close. Market cap of $18.957 billion, a beta of 0.94, so just slightly less volatile than the overall market. PE ratio, that actually seems pretty low at $12.58 per share. Anything under 15 tends to be a pretty decent buy, but you would really want to look at this company compared to other companies in the same or a similar sector. EPS doing similar business, right? Just because it's an industrial company like a railroad, for example, I wouldn't compare a railroad to Global Payments. It would need to be another company doing something in the payment space. Earnings per share is $6.18. Earnings date August 5th through August 11th, somewhere in that window. Forward dividend is $1, which puts them at 25 cents per share, with a starting dividend yield of 1.27%. Ex-dividend date June 13th. We are past that. Looks like they're going to pay out in a couple days on the 27th, but you will not get that next dividend. You need to buy a company the day before or before that even the ex-dividend date. Do not buy just on the ex-dividend date. That does not guarantee you are going to get the next dividend. But they will be paying out, and for those of you who hold this company, on the 27th here in a couple of days. 1-year target, at least according to Yahoo Finance, where I pulled this information from, $94.74. They see it going up from here, but not quite back to its 52-week high at 120. So $94.74, you know, that's $26, $25 and some change less than their 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. It is just a quick check. It is not the end-all, be-all. But to do that, we look at their 5-year dividend yield average, 0.75%. We compare it to the current, 1.27. Over here, 1.27, where it says forward annual dividend, same number. Since their current dividend is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, their payout ratio is very low at 16.18%. I like anything under 75%, so that is very low for me. Looking down here at free cash flow, I want growing free cash flow because companies can do some things with that free cash flow. They can make acquisitions, reinvest back into the company, buy back shares. They can pay a dividend, which this company does. They can raise that dividend over time, pay down debt, and they can even keep some of that free cash flow on hand in the form of cash or invest it in other stocks if they wanted, or other companies. Going back to December 2022 here, 1.6 billion in free cash flow. December 2023, 1.5 billion, so a little bit of a drop there. 2024 back up to 2.8 in trailing 12 months, which again, keep in mind, we are in the middle of 2025, so part of 2025, this trailing 12 months numbers is going to include 2024 numbers. So they're at 2.9 billion, so it looks like they're on the upswing, but again, we're going to have to wait to see how the rest of 2025 shakes out. They are repurchasing shares here. 2022, you can see 2.9 billion pulled out of the market. 2023, 459 million. 2024, 1.6 billion, and trailing 12 months looks like they're maintaining that trend at 1.2 billion, but again, keep in mind some of that may be 2024 numbers. And just because they're rebuying shares, pulling shares out of the market, you want to compare this to issuance of shares, because they could be issuing more shares than they are pulling out. We'll see that here towards the end, not the issuance of shares, but whether or not they are pulling more shares out than they are putting into the market. Jumping over to stockanalysis.com, the previous slide was from Yahoo Finance. I am not affiliated with either source. I do recommend more than one source so that you can make sure the information you are looking at is accurate and up to date. It gives you a back check. So 2, if not 3 sources. You pick any sources that you like. You don't have to use the ones that I use. They do have 28 analysts that have taken a look at this. They call it a consensus buy. Low target of $77, which would represent a 0.86% decrease from where it currently sits. Average estimate of $119.04, which would be pretty close to its 52-week high. That would represent a 53.27% increase from where it currently sits. High estimate of $194 would represent a 149.79% increase, and that would be a new 52-week high. Jumping into statistics, I like to look at return on capital employed. I like 10% or better here, and they are a little low on this number at 6.35. So we want 10% or better, so that one does not quite make it for us. EPS growth, I like 5% or better forecasted over the next 5 years. They're at 24.45%. Very nice. Revenue growth was not listed. Looking at their dividend history, quarterly payer, as we mentioned, payout ratio, again, very low, 16% range. Now this, I do not like. No dividend growth. With such a low payout ratio, there is really no excuse, unless they're focusing more on buybacks, share buybacks, for them not to be raising this dividend. I would like to see them, again, with such a low payout ratio, start increasing the dividend over time. Buyback yield is positive, so whenever they do buy back shares, they are doing it effectively and efficiently. They are pulling more shares out of the market than they are putting into the market. Excuse me. And the shareholder yield is positive at 4.39%. We want to see that as well. They do pay out, like most companies, on the March, June, September, December timeframe. Going back to December 2022, they paid 25 cents, and they've held that steady through this last payout, June 13th, 2025 here. So again, with such a low payout ratio, I'd love to see this payment processing company here, payment solution company here, growing their dividend. That is a very low payout for no dividend growth. All right, let's run this one through the screener here. Understand the business. They are a payment solutions company with some back of the house products or business products that they provide for, again, marketing, stuff like that. But their bread and butter is the payment side, whether that's processing your payments or receiving payments. They are in that business. Growing free cash flow, no, a bit up and down, actually, for growing free cash flow. So no check there. Growing dividend, now this one is where I'm frustrated. I have a company, actually a couple companies like this in my portfolio. AT&T is one, which I knew buying it, they had just cut their dividend, so I wasn't expecting dividend raises. Ally Bank is another one that I hold that has not been raising. I think they've been paused for 2 or 3 years now, 3 years maybe, and that really frustrates me. Now, this company with such a low payout ratio is a bit more frustrating because, man, 16%, you could, even small raises that I was complaining about yesterday with Apple, 4 to 5% would be better than nothing. But no growing dividend on this one, at least right now. Dividend payout ratio is under 75%, so check there again, 16%, and that's part of the reason I'm frustrated with them not growing their dividend. Very low payout ratio. Dividend yield theory says they're potentially undervalued, so check there. It is not within 15% of a 52-week low, so no check there. Return on capital employed was only around 6%, so no check there. Earnings per share growth was around 24%, so check there. We're only looking at 4 out of 8, and if it was to fall within 15% of a 52-week low, so if it continued to fall, then you would get that fifth one. But for right now, it doesn't quite make it onto my watch list. And Global Payments Inc., let me know what you think of the company. Do you hold it? Are you maybe one of the reasons it was selling off today? Did you sell out of Global Payments today? Are you looking to buy? And if so, do you have a target price you're waiting for? Or maybe you're buying now? Let me know. I'd love to hear from you in the comment section down below. But this one does not quite make it onto my watch list quite yet. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics down below. So if you have a company or another topic you think that might be fun or interesting for me to cover, go ahead and drop it down there. I'll take a look at it and possibly add it to the rotation if it's a suggestion for a video. If it's a suggestion for a company that pays a dividend, I will just add it to the list and we will work it into the rotation on day it pulls back. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Hey, for those of you who have made it to the end of the video, really appreciate you watching to the end. Watch time is one of those metrics, so thank you so much. Don't forget to hit the subscribe button if you have not already done so. Hit that thumbs up button, like button down below. Share with anyone you think that might find value in the content. Drop a comment on your way out and hit that notification bell. We'll see you in the next one.